Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is Sunday, the 16th of June 2024. I'll be doing the weekly market review. Starting with the XY, here we have the weekly time frame chart. As you can see, after we took out the sell side liquidity, we started seeing some higher prices as I've mentioned in the last weekly review. Now I'm aiming at this rejection block and the buy side liquidity, and obviously this buy side liquidity. Now, if you know what's happening around the world with the petrodollar deal that is between KSA or the Saudi Arabia and the United States, where where Saudi Arabia is not going to be selling petrol or it's not going to be selling oil with the US dollar currency. So we can expect some kind of manipulation to the buy side liquidity before the meltdown of the US dollar. That's what I'm expecting in the US dollar. It can just rally up higher, do the manipulation to the buy side liquidity, make sure that everyone who's trying to go short just get liquidated above these highs, because people who are shorting after the news that came out of the petrodollar deal or the arrangement agreement between the Saudi Arabia and United States, when it is done, that agreement is no more active, they'll be selling because they'll be thinking that the US dollar will not be sustainable because the Saudi Arabia is not using it anymore. But this is where smart money or the people who are controlling the markets are gonna be just sending price above these highs to attack the people who are trying to short it based on the news, and then from there we can see some manipulation. So accumulation, manipulation, and then distribution to the downside. So I'm expecting some kind of a movement to the upside just to attack these buy side liquidities, and then from there we can see some lower prices. Going to the daily time frame chart, you can see we have a bullish order block. This is a bullish breaker. As you can see, we are formed lows, high, low, low. We took out these lows, this low and this low, and then we rolled up higher, have fair gap, and we have the bullish breaker. Price retraced on Wednesday, as you can see, formed a bullish order block. Then Thursday, Friday, we rallied up higher and we broke above it. Now next week we might close anywhere and we might form a fair value gap. This fair value gap can be traded to on perhaps Tuesday, form the low of the week, and then Wednesday, Thursday, Friday we can attack the buy side liquidity. So this is my playbook for DXY. I'm looking for higher prices to attack these intermittent highs and this high. So that's gonna be pretty much it for DXY. Going to ESC, I'm viewing the continuous contract, I'm viewing the weekly time frame chart. As you can see, we're just in a buy program. We're looking for higher prices. In a buy program, we continuously seek and look for higher prices or buy signals until we're proven otherwise, and we see a sell program that is starting. So as you can see, we retraced here to the fair gap between this candle's high, this candle's low, right there, and then we read up here. I mentioned about the constant enforcement of that discount wick. We traded down to the constant enforcement, we found some support, and then we read up higher, took out external range liquidity, and then we continued running up higher. This is these two consecutive down close candles are bullish order block. Price can form a fair value gap by next week's trading candle closure, and the week after we can retrace to the fair value gap and to the bullish order block. Now, if it wants to drive price energetically to the upside, we will be forming next week. We will be forming an immediate rebalance where the price will be opening, trading down lower to the high of this week or this candle, the high of this candle right there, and then from there we can see a continuation to the upside. This is where there are two scenarios. If this happens, it will be far more likely that we'll see a way more energetic move to the upside. But if we just stay in a range and form a fair value gap by the next week's candle's closure, we are likely to see some. We can we can see higher prices, but it's gonna be with weaker magnitude to the upside. Going to the daily time frame chart, as you can see right there, price after it traded up higher. We've seen some support here. This is the external liquidity right there, the bullish order block, but it's nested down to the daily time frame chart. You can see that the consecutive watchment is the rejection block traded up higher. Fair value gap between this candle's high, this candle's low, price retrace to the fair value gap. From here, it can just continuously run up higher, or it can run one more time down lower to the bullish order block, as you can see, and then run up higher. Also, we have here two consecutive down close candles. So that's gonna be pretty much it for ES. Going to NQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. Same thing is mentioned here on NQ, bullish order block, fair value gap, expecting price if it wants to retrace. We have the bullish order block, although we already touched the bullish order block. As you can see, last week we traded and closed above the bullish order block. This week we opened, traded down low to the high of the order block, and then we just jammed to the upside. Going to the daily time frame chart, you can see we have a fair value gap. This candle is high, this candle is low. Price formed equal lows right there. We can see price breaking down lower and taking out these lows, and then from there we can continuously see higher prices. Going to Dow, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, Dow is relatively not in sync with NQ and ES. So in NQ and ES, we are seeing higher prices, as you can see, but for Dow, it's just breaking down lower. Now I want you to pay very close attention to this line right there. We're forming relative equal highs at this line, and it's also the low of the fair value gap, the weekly fair value gap. So price can run up higher towards the fair value gap before breaking down lower, or it can just trade above it. There is no clear direction for what I want to see in Dow. Going to the daily time frame chart, you can see the relative equal highs that are forming here above this line, at this line, or just below it. We have the daily fair value gap and the high of the weekly fair value gap. So price can retrace, work up in this area, and then break down lower because we're forming here. As you can see, we're forming sell side liquidity. So it would be expected from price if I'm the one who's driving and controlling price, I'll be sending it up higher, take out all the buy side liquidity right there, and then from here just jam it down lower, take out all of these sell side liquidities, fill the take out the sell side liquidity, which is at the consecutive argument of this weekly fair value gap. This candle is high, this candle is low, and then reach to the low of that fair value gap. So that's gonna be pretty much it for Dow. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame chart. You can see we formed the high, we took the high, and we started breaking down lower. For the XY, we're looking for high prices, which means for Euro USD and Pound USD, we're looking for low prices. So price can retrace to the inverted fair value gap, which is this candle is high, this candle is low. We have fair value gap. After we close below it, it's considered as an inversion fair value gap or an inversion BD array. Price can retrace, trade to the high of that, can trade to the can trade to the inversion fair value gap and just trade down lower towards the liquidity. Going to the daily time frame chart, as you can see, we have the stop rate that happened here. We traded up higher from these highs. We took out the highs, consolidated a little bit, and then we jammed down lower through this low. This is forming a bearish breaker, and we have a fair value gap between this candle's low, this candle's high. Price retraced on, as I mentioned, on Wednesday, worked inside the fair value gap and bearish breaker, and then Thursday, Friday, it's continuously traded down lower. We have a bearish order block right there. Price can trade to the bearish order block and just continuously push price lower towards this sell side liquidity and this sell side liquidity. So that's pretty much it for Euro USD. I'm looking for lower prices. Going to Pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. As you can see, Pound USD failed to take out this high. Euro USD also failed to take out this high, but it is more of a profound market structure here on USD when compared to pound USD. Price traded to the favorite gap, which is between this candle's low, this candle's high, and has also taken out the both sides of the last 2 weeks, or actually the last 3 weeks. So we took out the buy side liquidity and the sell side liquidity. Going to the daily time frame chart, as you can see, we from the low, we ran up higher. This is on Wednesday, took out the buy side liquidity, and Thursday, Friday, we broke below this low here. So this is a bearish breaker, as you can see, and on Monday, if we close anywhere here, we'll be forming potentially a favorite gap. Price on Tuesday can retrace to that favorite gap, form the high of the week, and this will also form the high of the week on USD and the low of the week on DXY, or the US dollar index. As I mentioned the scenario on DXY, you can rewind the video and you can watch what I've just mentioned about DXY, and then from there you can just break down lower towards the low of the weekly favorite gap, this low and this low right there, and we have a favorite gap here, and just below this favorite gap the rejection block and the sell side OTC. These are areas where you'll be expecting some kind of reaction, so you'll be trying to take some profits at these areas. So this is just an outline of what price can do. You would want to work inside this framework. I hope you understand what I'm trying to what I'm trying to explain here. So you're looking for lower prices when prices still here, and we form the favorite gap. Maybe tomorrow we'll be forming this favorite gap on Tuesday. You'll be expecting some kind of a manipulation, so you don't want to be in the manipulation. Once the manipulation is done and you see a clear turn, once we traded on Tuesday and from behind the week and prices started breaking down lower, you could be taking some setups, you can be taking some positions shorting towards this low and to the other targets that I've mentioned. So you have to bring your own intuition into trading. I'm just trying to show you and guide you to the right path in terms of what I'm expecting of direction and narrative and the price based on the markets that I'm showing you, the XY, the futures market, ES, NQ, and Dow, and the Forex market, obviously, EURUSD and Pound USD, also known as the fiber and the cable. So you can apply this to all of the other markets. I do also provide analysis for gold, oil, and Bitcoin on monthly basis, so you can also take benefit of that. At the beginning of every month, I do provide analysis for all of these markets and as classes that I've mentioned earlier. So I really hope you found this one insightful. Until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.